Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good weekend, all. Ira Epstein with your weekend financial update for this Friday, the 2nd of March, 2018. Wow. What a crazy day. What a crazy week. The question on everyone's mind this weekend is going to be, will the president get reason to walk back his statement on tariffs? We've already seen world leaders everywhere coming in and saying how displeased they are that the U.S. is going to raise tariffs and create what they think is a trade war. We've seen that Mexico and Canada are trying to find exemptions, and Wilbur Ross has said that there are no exemptions today as I was watching a TV interview. But remember, this is all the art of negotiation. And we have been under attack as a country, I guess, is one way to look at it, for years, as we have trade deficits with so many of our partners. We've asked for negotiation is one way to look at it, and away you go. What nobody's explaining to me, and I am not pro-trade war, I'm against it, in fact. But what nobody's saying is, how do you get these deficits down if the countries that you're trying to negotiate with don't do something? I don't have the answer. And the market is looking at things in a bit the way I am. They're wondering, do we get something over the weekend that gets us off of this terrible impasse? Don't know. You came back from the lows in the stock market, roughly 330 points. The S&P up about 43 off its low, and 140, 150 points in the Nasdaq, as you can see. So an interesting day. I don't know that the metals did all that much. If you really saw where the last trades of the day were on Thursday, they were literally right about where we closed today. The dollar definitely under some pressure. We saw in the Japanese yen that Governor Kuroda, that's the Bank of Japan's central governor, has taken a change of heart, and he's talking all of a sudden today that maybe 2019, excuse me, is when the Bank of Japan starts abandoning, or if you will, tailoring back this easy money policy. Now, they've done certain tailoring to it all the way through, but a cutback, that's a different thing that we're hearing. In the energy markets, up a little bit today. You know, this market seems to be going more range-bound than anything. The grain market, we saw a correction in wheat after a phenomenal rally this week, and beans are holding on as we still are having the situation of Argentine weather. That hasn't gone away for the Great Plains either. Interesting day. Bonds and notes. The market sank back today, so it was confusing. They're putting yield back into the market. The dollar, instead of responding, fell on that news, and the stock market came up. I think that what you saw was some of the event of yesterday where the risk on trade was wiped out, come back on a little bit today. That's probably some of what went on. When we still look at a monthly chart of the E-mini S&P 500, since 2016, you have not hit the 18-month moving average of closes. To get there from where you're at right now, you have to break down another 200 points. It's possible if you go into a trade war. We'll see what happens. Right now, there's still an upside bias. When we come to the weekly chart of closes, I call it still in a down thrust off of this break. We had one bounce, and notice what the market did. It came today, closed at 2690 roughly, and I want you to look at what the 18-week average of closes is, 2689.80. You know, in round figures, they're at the same number. So the market is what I call trying now. It's in a zone where it waits to see what's the next shoe that's going to drop. And that's the big issue. Do we walk away from this and there's no war? Do we hear the president say we've made progress, blah, blah? Or does he say, nah, nobody's doing anything. We're going to go with this and play it out that way? I don't know. I don't think anyone has a handle just yet. When we look at the bar chart of the E-mini S&P, we see a pattern that is not decisive. What do I mean by that? You still have this big rally, and we can come here from this point of 2878.5, and that was made, if you look, February 2nd. We then dropped hard, followed through with a bigger drop through the week of the 19th down to 25.29, and then we began our bounce. And the bounce got up to the point where we came up, made a higher high, and now this week we're having an outside week down. The bull market, in one theory, can reassert itself if the market takes out this week's high as a chartist. Forget fundamentals. As a chartist, when you have an outside day or a week, I look at that as something that shouldn't be taken out for the next 2 bars. I want to say this correctly. On a daily chart, each bar is a day. On a weekly chart, that would be 2 weeks. We'll see if that happens. From that point right now, you're 100 points away. When I look at where the market stopped, I've already shown you. It's the 18-week moving average of closes. The 100-week is way down here, so where are the Bollinger Bands? The Bollinger Band support is 25.2250, and if you take out this week's high, I would not be surprised to see a challenge of the upper Bollinger Band. This market is about as neutral as I've seen in a long time. Momentum is pointing down. The bias is neutral. You're basically right on that 18-day average of closes, and you're void of a swing line trend. Wow. In the Nasdaq, it's a bit different. The Nasdaq had the same correction, came up, did not take out the previous high, another outside week down. Unlike the S&P, the market can afford to fall back to the 18-day average for support. Obviously, in the S&P, you're right on it. Momentum went totally flat in this market. It's not pointing down, not pointing up. Should this week's high be taken out, you're so close to all-time highs, I wouldn't be surprised that you challenge it. We'll see what happens. Again, an outside week down, if you take out the high of that, is what? It's a bear trap, and you'll often make a run to the closest of a major moving average. You got the 100 here in the 18, so that would be to the up. It'd be the Bollinger Band. In the in the Dow, you've got the same pattern as you do in the S&P. No real trend. The market came down, and it did close under the 18-week moving average of closes. So the bias is down. Momentum is clearly down. There's a little more bearishness in this market than there was in the S&P. If you take out this week's high, it's the same thing. Could be a trap in the market. You'd have to look and see, do you go for the all-time high? If it's not taken out and the market heads down, is that the lower Bollinger Band at 22,848 in play? Rough market today. In the Russell, whole different game. Lower highs, lower lows. This market went bearish today, closed under the 18-week average, and momentum is pointing down. So until this week's high is taken out, I think the bears took control of this market at this point. In the VIX on the weekly chart, you weren't able to get back to the 18-day or the 100-day moving average of closes. Did I say day? I meant week on both. I'm so used to the daily. 100 or 18-week moving average of closes. That is not a surprise to me. I have talked on the daily charts that this whole trading range top now might be a level of support as a chartist. At least that's what I'm thinking. And you certainly got right into that zone if you look at it. Market found some support there. The pattern, still an uptrend, which means volatility is still very much at play. Now, a couple of things happen here. What if you take out this week's low this coming week or the week after? It could very well set up a challenge of that, as you'd create what? A bull trap. It's the exact opposite of the other charts. In the 10-year notes, you've got lower highs, lower lows. You're still locked in with downside momentum, and the bias is down. Yes, you can afford to get a rally in this market. Yes, the market's up for the week, 2 ticks. So basically, it didn't do anything. In the daily, let's go to the weekly chart. That's what I want to say. The weekly bar chart of the dollar index. I keep thinking dailies. I have a lower low and a higher high. Therefore, there's no trend on the swing line. The swing line, by the way, if you'll all remember, is an indicator that I created. And what it does is it helps you, and it certainly helps me, to look at a chart and instantly see is it trending or not. And then I put filters on that in the terms of moving averages. Now, because I define a trend in an uptrend as higher highs and higher lows, and a downtrend as lower highs and lower lows, by looking at it, I can say it's trending or it's not trending. Then I look to see the bias of a market. If you're under the 18-week average, I give it a downside bias. I then look at momentum. Momentum is picked up in this chart. You can see that the red is over the blue, and it's still trying to arc up a little bit. So even though the dollar didn't do an awful lot, it was up for the week 10 points. That's not very much. All you can do is say that the market is sort of stuck right here, and that makes sense. Is everybody's waiting to see, is the tariff for real? In the euro currency, you made up an awful lot of loss today. The market came back and for the week settled up 27 points. It is not a trending market. You have a higher high and a lower low. In terms of momentum, it's slipping to the downside, but the bias is up. I'm going to leave it at one word: confused chart on the longer term. In the Aussie dollar, you've fallen down to a support level. The market had been with a pattern of trying to make lower highs, lower lows. It's done so. The trend is down. If the market can continue down in this, which I think will depend on these tariffs and so on, will the 76.20 level be hit, or will the market start bouncing around this 18-week moving average of closes? The Canadian dollar under assault. If the tariffs go into place, Canada, we import the most steel from abroad. I'll call Canada abroad just to say it. Right there. And this market's feeling that pressure, plus the NAFTA. It tells you if the president's doing this, what else is he going to do? It is not a pretty situation there. So do we put the swing line and the 100-week moving average in play? Absolutely. In order to negate all this, you got to get back over 80, 34.5 on the chart. But even if you did that, it would not turn the trend up. It would only turn the downtrend off. This market still has downside momentum. Japanese yen. I now understand why the yen has been going up, with no matter whether it gets bull news or bear news at least. And that is that I believe people in the know knew that the Bank of Japan might be changing its pattern, or guessing. I don't know if they actually knew it, but somebody was guessing it, because this market's just staying right here. Now, traditionally, the yen is a safe haven currency and has been as long as I can recall. It's quite a while. And that's going on. But now you've got the potential, just like we had out of Europe, where the ECB is talking of ending its QE program, that for the first time we have heard Mr. Kuroda say it could be 2019. Well, we're into March already, so very interesting. It's not all that far away, and markets like to anticipate events. So you've got an uptrend, upside bias. You are over the upper Bollinger Band, but it's not as important as it is on the daily charts. In Bitcoin, I'm not going to make the mistake and get anybody mad at me again. Last week I said Bitcoin Cash. I did not mean the fork of Bitcoin. I meant the cash shown by CoinDesk and other exchanges. I don't want to get into it. If you think I didn't know what I was talking about, I get it. Maybe I don't. In any case, on the daily bar chart, there's not enough data to show you weekly, and I don't want to confuse anyone again. Higher lows, higher highs, overbought condition, bias up. Market could make a run for the upper Bollinger Band if it takes out this number right here. This, I believe it's 88.20 on a weekly. I can't even go back to it, but I'm pretty sure it's 82.20. That would negate the uptrend, and then the question is, what happens next? And we'll cover that on the daily charts later. In the Brent crude versus the WTI, you're stuck at the 335 level. I feel so good about this. I was pinpointing when you were up here and over here. I said, there's probably a number where it costs to ship a barrel of oil from the Gulf to Asia. I had talked to some people, read about it, and I came up with the idea, maybe it's $1 a barrel. I don't know. Well, this market's gotten down there, and I think that's close to the differential. I could be wrong. It doesn't matter. The play of the premium of Brent over WTI is gone, and now we're even starting to see more natural gas shipments out of the U.S. We opened up today our first big shipment out of the East Coast of nat gas. By the way, we added one rig that I could see in the crude oil rigs, and I think 3 in the nat gas, according to Baker Hughes. Lower highs, lower lows, under the 18-week average. You're in a downtrend on the longer-term weekly chart. Could we go back to the lower Bollinger Bands? The question. You negate the downtrend if you take out this week's high. In the WTI crude, I don't see a trend. Yes, I have the markets with higher lows, but I also see now a lower high with this outside week down. The bias is up, but the momentum's pointing down. I call it confusing. All right. You could argue with me, and you'd be right in saying it. Well, Ira, you're still over 68.07, so the swing line is up, then the bias is up. Okay, I can make that argument too, and I'd agree with you. But you still can't argue that momentum is down, and momentum often leads price. In nat gas, for the week, we're up a little bit here. We've had unusual weather. I don't know if you're looking at the weekend weather, that nor'eastern that's going around, but boy, that's a monster. And it's going to require some nat gas. But what happens after that? We're already at March 2nd. Before you know it, remember, March goes in like a lion. I was a kid, out like a lamb, and the weather's going to get milder for a little bit here. It's not summer, so the usage isn't quite that much. That doesn't mean our export business isn't good, but we are producing this like mad, and that is the important thing. The U.S. is going to be a major, major world player in natural gas. Resistance in the market, 289.80 to 291. So you put it all together, an interesting week. I'm gray already, but had I not been, I would have been. Let's talk about what we can offer you. You know, this weekend, let's assume you're trading the grain markets. You're going to want to know, how's the Argentine weather? Has anything changed? What's going on there? You're going to want to know as much about the Southern Plains. Has the forecast changed? What about that storm out west? Is it going further north, going to hit anything? And then, of course, you want to know about the tariffs. Are they going through? Did anything happen? We cover all of this via our staff. I, of course, write my own research for you, and it's out Sunday nights. You get a real handle on all this. So how do you get a free trial to some of this? Just go to our website. All you need to do is click on you'll see our address, you'll see a carousel of free offers. Click any of them, the forms will appear. You can always call us. It's the easiest way to get things done. You can click up here if you're watching me on YouTube, and on many sites underneath us it says click here for Ira's free information. I'm Ira Epstein. I wish you all a great weekend. I need it. I'll see you Monday.